Hello, and thank you for joining us for another session of Reverse Mortgage 101, where we take one portion of the reverse mortgage process and break it down into bite sized pieces for you. We choose these based on conversations and a lot of questions that we have from our borrowers and our clients and break these down for you so you have a bit more information about certain parts of the product to help you make a fully informed decision on whether this is something that's right for you to certainly learn about and pursue as the option becomes available to you. So today, we're going to talk about the 4 outcomes that can happen to heirs when a loan comes due. And a loan can come due when both borrowers pass away or when they choose to move out of the property. So we have our 4 outcomes, and we have yes, 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 no, no, yes, and no, no. And what these represent is yes, heirs want the house. Yes, there's equity in the home. Pretty straightforward here. They pay off the current mortgage balance, and then heirs can refinance or use the proceeds from other estate assets to purchase the home from mom and dad. Yes, no. Yes, heirs are interested in purchasing the home. No, there's not equity. In this case, they obtain a short payoff for 95% of the current appraised value of the home. And this is where things get really exciting or really show the consumer protective nature of the loan. The non-recourse protects the heir's interest in the event of a transfer of the property. And really, less than 2% of heirs want to keep the home. I know for me and my daughters, I think, oh gosh, you're going to keep my house forever. This will be great. They probably fall in that 2%, not the 98% that want to keep it. No, yes. No, they don't want to purchase the home. And yes, there is equity in the home. And so the heirs would sell the home and receive the gain on the sale, a very common way for borrowers to leave an inheritance for their heirs. And then no, no. No, there's not interest in purchasing the home, and no, there's not any equity remaining in the home. In that case, the heirs sign a deed in lieu of foreclosure. And since there's no economic value in selling the home, this allows the heirs to relinquish the home to the lender. And there's a no harm, no foul here, which we'll talk about a little bit more here in just a moment. So as we break these down a little bit further, outcome number 1, yes, the heirs want to purchase the home. Yes, there is equity in the home. They pay off the mortgage balance by using a refinance, qualifying for their own loan, or using proceeds from other portions of the estate. This is no different than any other loan that might be on property at the time of sale. We take the sale price of the home minus the current loan balance, and that is the gross amount that goes to the heirs or the owners of the property. There's no fine print or other stipulations that come with the reverse mortgage. It's the exact same as having no mortgage or having a traditional mortgage on the home. You take what the profit is. And then heirs have up to 12 months to obtain financing and complete the purchase. I think this is really important that it gives you ample time to make sure that you make the decision that you want to make, whether it's keeping the house or selling the house, organizing, the presentation of the home, hiring a realtor, whatever might be involved there. You've got 12 months to get that done. Certainly keep in contact with the lender and keep in contact with us, and we'll work on your behalf throughout this process. Outcome number 2, heirs want to buy the house, but there's not equity. And this presents a potential great opportunity where they can obtain a short payoff for 95% of the current value. As we talked about less than 2% of the homes stay in the family. And here's how that 95% of current value works. There's an appraisal done at the beginning of the process when the borrowers take out the reverse mortgage. And then when the loan becomes due, there's another appraisal done. So that's where we get our current market value. So if we have a time similar to 2008, where we have a significant drop in real estate values, and let's say we have a home that's worth $500,000, but a loan balance of $600,000, the short payoff on that property is $475,000. So if heirs choose to keep the property and it's quote unquote underwater, they don't owe $600,000. They can buy the property for 95% of the appraised value. So terrific opportunity there if someone's comfortable, depending on what the market looks like and if they want to purchase that home and maybe do a little bit of speculation or just buy it at a potentially lower rate. And again, heirs still have up to 12 months to obtain financing and complete the purchase. And it's not a card laid, card played. You may decide that you want to purchase it on a short course payoff and then change course and decide to give it back to the bank with a deed in lieu of foreclosure. So options remain open there. Outcome number 3, no, heirs do not want the house, and yes, there is equity in the home. This is far and away the most common situation. Heirs sell the home, receive the gain on the sale. Again, no different than any other loan that might be on the property at the time of sale. Sale price minus loan balance equals the gross amount that's going to go to the heirs. And then, of course, outcome number 4, no, heirs do not want the house, and no, there's not equity remaining in the home. And this is where we sign that deed in lieu of foreclosure. No repercussions to heirs. I think that's really important. One of the promises, one of the guarantees of the non-recourse reverse mortgage is that you as a borrower or your heirs will never owe more on the loan than the value of the property. And that non-recourse feature is covered by the FHA mortgage insurance. That's a part of the initial closing cost. So that is covered by the government, by the FHA. They understand that this is going to be probably a very small amount of reverse mortgage situations, not just any mortgage situation, but it does exist. And you do have that absolute guaranteed feature that it is non-recourse and there won't be any repercussion to the borrowers or the heirs. Questions, thoughts, ideas, concerns that you have about any of this, please feel free to reach out. My goal here is to be the reverse mortgage resource in the Twin Cities to make sure that you're getting accurate, current information about what this loan looks like, answering your questions, and sharing the power and the flexibility and the options that it can create and dispelling some of the myths that it might have had in the past. Here's my contact info. If you go to largerlegacy.com, you can check out a weekly newsletter that I write, and also check out our events page where you can find live seminars that I do throughout the Twin Cities on a regular basis. Thanks for joining us today. Look forward to seeing you again next time.